Hello, good evening, and welcome to How to Profit from the January Effect Trading Commodities in December. So we have a lot to cover on this evening's webinar. First of all, during the live session, we will be looking at live technical analysis and commentary. We'll be going through live trading indices and precision trade setups. We'll be going over commodities, and we'll also be giving tips on trading for maximum returns, and of course answering any questions that you may have. So during the session, we will be taking a look at gold, at silver, at natural gas, the commodity currencies, and also copper today too. Now, why we trade binary options? Well, you can make money regardless of whether the price of commodities move up, down, or sideways. You can make money from a low deposit. All the profit you make is 100% tax-free, and you can make money at any time from anywhere in the world that suits you. So before we start the session, I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also, a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset, and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications and has appeared frequently alongside myself on financial television. So, first of all, we just need to clarify. So what is the January effect? You might be wondering if you don't know already. Okay, so the January effect occurs when investors sell an asset in December. And boy, do we have a good example today. If you look at the markets today, they're sold off substantially on commodities and commodity currencies. So this is to be expected during the month of December, only to buy them back in January again for tax purposes. So this is when we can see a rise again towards the end of the month, end of December, and also beginning of the month into January. So as well as tax considerations, other explanations are people investing their Christmas bonuses. The January effect is a result of traders and investors selling in December and buying an asset back in anticipation of the rise during the month of January, otherwise known, of course, as the January effect. So what we're going to, first of all, have a look at, we're going to look at a 3-year chart of gold during the month of December and January. So we'll take a look at that. We'll be just giving some examples of previous January effects. So hopefully you can see that clearly on the chart here. So what I've pointed out is the 1st of December. So just going back on a 3-year chart, you can take any 3-year chart on gold and just take a look. It's difficult to get much further back than that and still give you good visual on the chart. So if you take a 3-year chart and you look at December, look at January, what typically does happen, certainly happened the last 3 years, and this year's no different. We sell off during the first couple of weeks of December. In fact, the last couple of years, we've continued to sell off right until the end of December, only for the markets to then get a big move at the end of December and the beginning of January. So this is what you want to be anticipating. So you are going to be in a position where you, for the time being in December, you want to be selling short a lot of assets. Certainly today and this week, you wanted to sell short, for example, gold, silver, Australian US dollar. For those of you who trade indices, Dow Jones, it's been really good to sell short. So all of these markets were really good sell shorts over the last week. You can see a lot of traders are winding down their positions for the year. They're closing out positions. They're just closing them so they can just balance their accounts really for the year, particularly funds and banks, before they reinvest in January or at the end of December. So this is what happens. And on the chart here, so take it from the left, 2011, we got the fall in December, then we had the rise in January. So then we go to 2012, we had quite a substantial fall over the month of December, only to rise again quite substantially make back all the losses in January. So we had a significant move back to the upside. And then last year, again, we moved substantially down in December. Actually, we bottomed out right around the end of the month. And then in January, we then had another move with the January effect. So essentially, gold falls at the beginning of December, rises again during the last day of the month and into the first week of January, and that's known as the January effect. And this is what really the subject of our discussion today. So, where can you see the January effect playing out? Okay, so this is Tuesday. These are the trades we took on our live trading room, and also BOM on binary.com. That is, so this is Tuesday this week. We had a really nice sell signal here on gold, which we both traded on the MetaTrader platform and also binary.com. The binary.com, very straightforward. All we do, full trade, price to be lower, 12.59, come down, and that's hit that take profit nicely. All it needed to do was close 1 pip lower, which is why we love binary trades, because it's very straightforward. Don't even need to put a stop loss on the trades, just needs to close in your direction. So that was gold on Tuesday. Then we had Australian US dollar trigger from 0.91452. You can see where that's triggered just at the same level of resistance there. So again, full trade, price to be lower. We've actually found ourselves at 3-month lows for the Australian US dollar just today. So that's us breaking down to 3-month lows. So I hope some of you caught some action on Australian US dollar today. And this is silver as well. Silver actually triggered on Tuesday as well, and we had a nice move lower here from 20.30, and again we had a full trade from area of resistance. We've just come down and we've hit our take profit nicely. So these are just quite a few trade examples. Again, full trade, price to be lower, 20.30, trade just finishes 1 pip lower, and you win the entire trade. So we will be covering more detail, our top trades of the week on tomorrow's Commodities Corner. So if you are around tomorrow at 12:30 GMT, make sure you join us for the Commodities Corner. If you don't have the link or you don't know how to get that, just post that in the chat and we can make sure you do have that available. But do join us for tomorrow's Commodities Corner too. Okay, so next thing we want to take a look at is crude oil seasonality. So we've discussed gold, very clear January effect that we get. Okay, so oil, here is the 24-year chart for crude oil. What you'll notice is we do tend to bottom out on crude oil around about the end of November, beginning of December. So we are near the lows at the moment. We'll take a look at that very shortly on the chart. So we could be due a little bit of a move higher over December. What you will notice on oil, though, which is very telling, is we get the same move as well, the January effect. So you get what you can see in the green here. This is the January effect. So the red in December, we tend to bottom out, and then January effect in green, but also the February effect. So you see, it's not known as the February effect, but it's we get a big move in oil every February too. So there's something to note for oil, especially at the beginning of the year. Oil is fairly on the bullish side across January and February, particularly February. It tends to really skyrocket. So that's another tip for you with regard to crude oil and its seasonality. Okay, so there wasn't really much need to go into too much detail as to what the January effect is. I think it's pretty self-explanatory for you there, what we're looking at here. Essentially, markets, they drop a lot during the month of December, certainly the first couple of weeks of December, when various traders will sell assets they have, sell positions that they have, only to buy them back again in January at a better price, and also for tax purposes where they need to close out positions for the year. So that's what we've certainly seen today. So with that, we'll take a look at the live markets and we'll see if there's any trade opportunities at the moment. I'll try and show you some examples as well of trades that we've had even today, which we've still got running. So essentially, if you select rises with binary.com, you win the payout if the market exit price is strictly higher than the entry price. If you select falls, you win the payout if the market exit price is strictly lower than the entry price. So very straightforward for your trading on binary.com. So with that, we'll move across to the charts. And I'll just get you over to my live charts in just a second. Okay, so gold today, we've had quite a substantial move over the past week or so. You can see here, this is where we've fallen substantially lower. If I put it on the daily chart, you can see the big move lower. We've just actually found support just around the fib level of $1,223 an ounce. So we do actually have a little bit of a hammer forming at the moment on gold. You can see that, which is right at the fib level here, just above it, $1,223 an ounce. So that's going to be interesting. Still got another 166 minutes for that candle to fully form, but that might be suggesting that we could get a little bit of bottom. We've sold off really nicely since Tuesday, over 350 points until we've actually come down and hit that take profit target, or very simply a full trade for the price to be lower. Okay, so we will just want to quickly move across and have a look at silver for you too. The only issue you've got here is a lot of the moves have occurred already today. We've had some really nice sell short opportunities. You can see here we were pretty much primed for this. Nice move down in silver too. If I just put it on the 4-hour chart, you should be able to see that major level of consolidation. We had some sell signals here, broke down below 12.20 as well today, which was part of consolidation. We've had a nice move lower, and that's also followed through with Australian US dollar. There's my risk to reward there. You can see we've come down over a 10-to-1 on that trade, also just a full trade for the price to be lower. So Australian US dollar has actually broken through here to 3-month lows. So you can see we've actually come all the way down. We're just testing today 0.89149. And we're finding a little bit of support there at the moment. Okay, let's just quickly check. We're just going to go over to the oils for you. I'll just relate this to also the January effect as well, and what we can do to trade it. I think what we'll need to do is just take some. Yeah, what we'll do, we'll get some screenshots so I can show you this example. Okay, there are a lot of lines on my chart because we use various levels of Fibonacci with our trading. But if you actually, I'll put it in lines. Let's put it on a line chart, make it very simple for you. And let's put it onto. Sorry, guys, just need to get these charts nice and clean for you so you can see what's going on. We've been doing a lot of trading today, so they've been updated real time today. Okay, this is going to be a better view, I think, for you on gold and what we can expect. Okay, so here we have gold, and you can see, so in typical fashion here, during the December, beginning of December and into the second week of December now, we've seen quite a big move down. So will we go lower? Well, potentially we could go lower. We are quite near now to about 4-month lows on the chart for gold. So if we take it out and just look at the bigger picture here, we could go lower here. We might chop around a little bit. If we were going to form a bit of a base, we'll see how the market performs tomorrow, early into next week. But we do also have, it's going to be a big one, the FOMC announcement next Wednesday. So Ben Bernanke is going to be delivering his last speech of the year. That's going to have a massive impact on gold and silver. So if you do make sure, if you are trading, looking to take on some big trade opportunities, make sure you're available next Wednesday, 7 p.m. GMT, and you should make yourself available, particularly if Ben Bernanke, the Federal Reserve, they come out that they're going to do no taper. So you really want to have a look at that. Taper or no taper is going to be the big announcement. So if we take a look at the moment where gold is currently, we could be in for a little bit more downside here. We could come down to about 1,211. If we break lower than that, the next support, really the major support, we've got 1195 and 1180. So these are the real lows that we could put in. So we could put those in during the month of December. So we're up to the 12th of December at the moment. So that's where we could go if the market was to continue lower. If we break 1180, the market could go significantly lower, but that might hold. We'll see. And then what you want to do as we come toward the end of the month, let's say the markets chop about a little bit here as they start breaking down, if this happens, Then you want to position yourself right at the end of December and beginning of January for a potential move like this. Okay, so as we might see, just the market, buyers come right back into the market. So this trade sort of setup isn't going to be ready until the end of December, but then you're going to be taking, so if you can imagine down here, this is the end of December. Okay, that's where you want to take the trade. And this is second week of Jan. Okay, and that's what you want to look at. So that's how we're going to be playing this in terms of a seasonality play and also just playing the January effect at the moment. So next real major announcements for gold are definitely going to be next Wednesday. Today, gold, it could be a little bit overextended now. I wouldn't try and enter into any additional positions. Tomorrow afternoon at 12:30 is going to be perfect to take on additional trades. So good for the commodities corner tomorrow. But at the moment, we've had a significant sell-off today on gold already. Well done to anybody who has caught the move so far. But that's what we're looking at in terms of the January effect and trade opportunities that we've got later on this year. Now, Australian US dollar is also very heavily correlated to gold. So what you want to look at as well, Australian US dollar, is potential breakdowns here, coming down to the next Fibonacci level, which is also the August low, which is a 0.88468. So if we do break down low, there's not really too much reason for the market to stall where it is. We might get a little bit of stalling just below at 0.889, but we're looking very bearish here on Australian US dollar. We've had a big downward move. You know, all the key moving averages are much lower. We could certainly be due some more downside here. So there will be opportunities to sell short here as well. But in terms of going long Australian US dollar and taking advantage of January effect, same situation. You want to wait until the end of December. We might have broken the 2013 lows by then. And then right at the end of December, that's when you want to take the opportunity to then go long. Okay, so let me see if I can show you this on the chart previously. Yeah, I mean, it's not as severe because it didn't sell off as much last year, but you can see here's the low that we put in last December. This was on the 26th of December. So the final week of the year. So let me take a screenshot of that for you, just to demonstrate the January effect. Okay, so here we go, end of December. Here is roughly, this is about January. See what happens in January? Market rallies with the January effect. Only for about the first couple of weeks, and it sells off again. But you just need it to be higher over the first couple of weeks of the month. So again, just to recap, we normally reach a bottom in the markets around about, towards the end of December. I'd say about between the second week of December through to right at the end of December. And then from there, you're just looking to take on a position in order for the trade to be higher by mid-January. Okay. So that's what we're looking at for Australian US dollar. You've got the same situation. Silver. Let's go on the silver charts. So silver is not that far again from its, actually it's not that far from its 3-year low, silver. If we take out $18 an ounce, we're going to be at a 3-year low for silver, and we're not far from it at the moment. We're only about $1.20 away from silver's 3-year low. So we definitely are looking to see if we're going to get more downside here at the moment. Big move lower today, which we took advantage of. And at the moment, next key levels below 18.87 is going to be a key level of support, and below that, 18.19. So you can see we did have a trend channel starting to form here on silver. I'll just zoom in a little bit there for you. And that got broken today. So we moved down nicely. And at the moment, there's not really too much, again, to support silver from where it is right now. So if you want to play the seasonality trade again, you're just going to be waiting for lower prices here on silver. Wait for it to start to bottom out around mid-December. So just to also confirm, the Santa rally that we tend to get, it's not on commodities. You get the Santa rally with indices. You don't really get it so much with commodities. Commodities move differently. They're more affected by the January effect, and they do tend to see more selling in December as opposed to buying in December. So just to clarify that for you as well. And we'll see what other trade opportunities we have. Just to clarify on silver here. So what we're looking at potentially happening over December is come down here to 1887. We may chop about and consolidate if the volumes start to dry up. Maybe a spike lower over the last week of December when there's less traders in the market, so those left in the market have a bigger influence. We could see a spike lower, maybe even just take out all the weak hands here around 18, 19 to just flush out some of the longs on silver. Maybe we'll get down to about $17, $16 an ounce on silver. And then we would see, we'd expect a massive move, probably a capitulation on silver. We'd get a huge move in January as a lot of investors flock to get into silver. Something like that is sort of move which I would expect over December. If we continue to go lower, we don't look like we've reached the bottom of the market yet, but do bear in mind, next Wednesday, we've got the FOMC statement with Ben Bernanke, and that's going to have a very big impact on gold and silver. If they are going to really tank, and by that I mean if they're going to fall substantially lower and take out previous lows, it's probably going to happen on the FOMC announcement. Next Wednesday, the 18th of December, so definitely have that in your diaries. And finally, we'll just take a look at oil and how oil's looking at the moment. So you want to be taking a look at both Brent and WTI at the moment. You can see here, particularly with WTI crude oil, it is working its way out of this bottom which it formed. If you go back quite far on the daily time frame, we had a major trend channel going back to May and June 2012, which has actually been respected. We also respected some major Fibonacci levels. So we are working our way up here. We're looking for some nice positions coming into January and February, some further surges upwards. So oil's still presenting quite a good value here where it is at the moment. We are definitely just consolidating, waiting for a breakout. Maybe we'll get that tomorrow. During the commodities corner, we might have a setup there. So that would be just a move above 98.87 on 99 and a breakout just to for the price to be higher there if we do get a breakout. On the other side of that, because we're in such a strong consolidation at the moment on crude oil, WTI crude, this consolidation zone, a breakout either way is quite tradable. So a breakout to the downside below 97, we could go for a sell short market to finish lower, price to fall. So that will be a lower trade or a full trade on your binary.com. And if the market breaks above 99 on this consolidation, that will then put it above the 200-day moving average as well. So it's officially going to be in bullish mode. So buyers are going to get interested above 99 or be looking for a rise trade for the price to be higher. Brent at the moment as well. Brent's consolidating. Really, it's started to break through a little bit. 108.43 today. This is definitely a vent area for Brent. Has been a lot. This 108.43 level. So for those of you who trade oil a lot, this is a major level. You've got support here. It's on the daily. Got resistance here. You've got support again here. So this 108.43 level where we are at the moment is a pretty important level. So for us to hold that level, it's important for oil to be able to come higher for Brent crude oil. If we break through it, we're probably going to come down to 107. So if we have a close below this 108.43 level, I would just look for a full trade for the price to be lower there. So that's what we'll be interested in. I'm just going to check that out for 4 hour. In fact, we have now broken below 108.43. Got an inverse hammer now on the next time frame. It's not so apparent on the dailies, but on the 4 hour we have. It's looking pretty bearish actually. So I'm happy actually to take that trade. So let me just show you that. So we're just going to take a trade on short on oil. Okay, so the trade that we're looking at is we're going to go rise full. We're going to go to oil. And I'm just looking for that to be lower, see if we can do by tomorrow. Okay, good. I mean, that's pretty good payout there, actually, 86%. 108. Yeah, that's fine, 108.70. Okay, so again, just to recap that, we have now broken a major level of support for Brent. So we've this 108.43 level, which I've been looking at very closely here. We did break through it today, and the candle, which is currently forming on the next 4-hour time frame, is also confirming that. It's quite a bearish candle. We look like we're going to come back lower. So I'm looking for the price just to break lower. Not looking to be in this trade for ages, just looking to be out of it by tomorrow. A full trade for the price to be lower. So very simply, I've just gone to the markets, rise, fall, selected oil. Start time now. I think we need to take this quickly actually before the market closes. So I'm going to go for a low trade 1 day for the price to be finished. Lower 1,343 for 2,500. There we go. And that's been done. So there we go. That's a trade on oil. There you go. It's actually falling right now. So yeah, definitely keep an eye on that. That looks good for Brent at the moment. A full trade on Brent. There you go. Looks wants to come lower. Just needs to break it now. Doesn't really matter if it breaks it now or tomorrow. We just need it to be lower by tomorrow now by 1 pip, and we win the entire trade. That's really everything I wanted to cover with you today, guys. Just wanted to really cover Australian US dollar, gold, silver, and also the oils for you, and opportunities which we've got to trade the January effect, and also any day trade opportunities we've got right now. Do make sure also you join us for Commodities Corner tomorrow at 12:30. We'll be going through more potential live trading opportunities there as well. Okay, so with that, let me just bring you back to the presentation. Okay, and just to confirm, guys, just as a recap there, of course, binary.com, we've got the new rebrand. So if I said bet on markets, we are referring here to binary.com and using rise and fall trades. So just a little bit of a recap for you guys. If you select rises, you win the payout if the market exit price is strictly higher than the entry price. And if you select falls, you win the payout if the market exit price is strictly lower than the entry price. So very, very straightforward way to trade. And the beauty of these is, of course, you know, with the January effect, is that we're going into the Christmas holidays. Maybe you don't want to be stressed out if you day trade a lot, give yourself a break, because the Christmas holidays are a great time to take a break. But also, these binary trades are fantastic. You can just take a binary trade, have it expire over the month of January, and just be able to get on with your festivities, really. So that's where binary trades are excellent. You can just have these running in the background, don't have to manage stop losses, don't need to manage take profits. They're probably the best risk, actually return on time that you can get when you trade the financial markets, binary trades. So the amount of time it takes to put them on and manage them versus the payouts that you get. Okay, but I'm sure you don't need any convincing of that. So we've gone and done live technical analysis, trading, and correlations. Also, if you are new to binary.com and you haven't received this before, you can take advantage of this. So you can receive $20 trading credit on binary.com. Just use the bonus code 11121F20. And if you select, go to binary.com, select sign up, step 2, open real money account, and step 3, just enter that bonus code 11121F20. You get a bit of a Christmas bonus. You get £20 or $20 trading credit to start off your trading with binary.com. So do make sure you take advantage of that. Okay, and finally, of course, for those of you who would like to take their trading to the next level, we are open again from, I believe all our December workshops are fully booked now. So it's going to be from mid-January again. We're going to be holding Gold and Silver Club one-day masterclass. Also, you can find out more about our live trading room and our Inner Circle Gold and Silver Club live trading room program. So you can find out more about that just at the following. So you can request more information at www.jointhegoldensilverclub.com or contact us at 0207 193 0403 for our London office, +1 646 808 0403 for our New York office, and +27 11083-8403 for our Johannesburg office, or of course just get in touch with us at office@thegoldandsilverclub.com to find out more information. And do, of course, make sure you also subscribe to our newsletter, because that's where you can receive free weekly gold, silver, commodity currency news, live market analysis, and our weekly roundup of the events for the week. And with that, do make sure, if you're around tomorrow at 12:30 GMT, make sure you join us for Commodities Corner. We'll also be covering all the major events for the following week. We'll be doing a bit of a prep for FOMC next Wednesday. That's going to be major, guys. So if you're trading, if you've got any active positions in the markets next Wednesday, make sure you are able to manage those before the announcement. So 7 p.m. GMT next Wednesday, it's going to have a huge impact on the markets, okay? But we'll do a bit of a prep for that tomorrow as well. Okay, so guys, that concludes today's training on the January effect for gold, silver, oil, and Australian US dollar. I hope you find that useful. And big thanks to Banu.com and the team and Therese for putting on the webinar. And we'll definitely see you again on the next one. Okay, take care, everybody, and have a great evening. Cheers. Bye-bye.